This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with Brad Shepherd, managing partner at Sugarhouse Investments. Sugarhouse Investments is a real estate private equity firm that provides investors with passive investment opportunities in institutional quality commercial real estate, and they help fund cash flowing commercial real estate projects to move them forward. Together, they build long-term wealth and passive income streams. The deals they fund preserve capital investments, collect consistent cash flow, and build equity through future capital appreciation of the assets. Brad, thank you for joining us.
Hey, thank you very much. I'm excited to be here.
Great. So what was your background before investing in real estate? What did you do before this?
I've honestly been involved in real estate in some aspect for a good 20 years. I bought my first rental property the same summer that I graduated from college. I actually went to college with the idea that I would go into commercial real estate. That's where I did my internship. Life took me a different direction. And so I actually stuck with a small startup for a good 9 years there coming out of college. But I picked up that first rental right out of the gate.
Well, great. And so what excites you right now?
There's just so much energy around real estate and commercial real estate in particular. So many people have jumped into residential real estate over the last 7-8 years, saw the competition that was there. And then lots of those people have now moved on to commercial real estate as well. And so there's just a lot of attention here, which is fun. It's exciting to be part of it. I love educating new potential investors. That's where I spend the bulk of my day. I've really been spending a fair amount of time on my website and creating more content there to help connect with additional people. So, for me, I love the educational component, talking with smart people, but, they're maybe just only mildly familiar with real estate. And I love getting into the details of what the opportunities are here.
Great. Well, what's your advice for people investing in real estate? What do you tell them to do before they write that check?
Yeah, when you're looking at a passive opportunity, which I would encourage over a more active route of going out and finding your rentals and managing your manager. Even if you have a good property manager, it can be challenging. And I'm still experiencing that with my own portfolio of rental units that I have. But on the passive syndications, the passive commercial opportunities, it all comes down to knowing the team. You want to get to know the team. Do whatever it takes to know the team who is actually pulling the triggers, hiring the property managers, executing the business plan. Who are they? You want to better be a team as opposed to lone wolves. What is their track record? How experienced have they been? Have they been through some downturns? You want to see that they've had some multiple exits. And so, a good team can compensate for some tricky markets or some tricky assets, things that might pop up like massive unexpected freeze and snowstorms that just hit us in Texas a little bit ago. A good team can deal with those things where an inexperienced team might struggle more. And so number one advice I tell people, more so than the asset, more so than the market, is get to know the team.
Well, great. Well, let's talk about the state of real estate investing. How do you see the industry evolving from here?
There's a lot in flux right now. COVID, eviction moratoriums. So the loan products and terms, they've been in flux significantly over the last 6-8 months. There's been higher requirements, higher down payment thresholds, or maybe some additional hoops that we've had to jump through. So that's always, something to deal with as we're going into a new property. There's a lot of new players. So the competition for these assets is higher than ever. There's reason for it because these are lucrative deals, and there's a lot of big dollars coming at these. And so it is a big relationship play. And like most things, it comes down to relationships with sellers, primarily relationships with commercial brokers, et cetera. But I think people are just getting more and more creative in how to approach, how to find these deals, what potential renters would look for in a property, dog parks, private backyards, Amazon lockers, Google Fiber, et cetera, et cetera. And so we're always trying to figure out what can we put into a property that will attract the highest rent potential from local renters. So yeah, there's always some learning to do along the way.
And so what's the biggest change you see coming up?
Yeah, I think it just kind of continue with that flood of capital. There's lots of eyes on commercial real estate, particularly multifamily. We've seen over the last year, even with the eviction moratorium, some struggles there. Multifamily has performed well, where, for example, office might be a little more difficult when you've got so many companies that are just moving their staff to full-time remote. So there's just a lot of attention going to it, a lot of capital, and it's a lot of capital chasing fewer and fewer deals. Just like we were experiencing in Austin with home buyers trying to find a house in a very limited inventory scenario. Same thing's going on in multifamily. It's a lot of dollars chasing very few deals. And so it is a challenge to find suitable deals that we feel comfortable taking on and bringing other investors into.
Great. Well, let's talk about your real estate investments. What's your criteria for taking on a deal? What do you look for?
Yeah, so our approach is generally what we could call a light value add as opposed to a full turnaround deal. We don't do new development. So we're purchasing currently functional and operational assets. These are generally B-class properties. What this means is, frequently a potential investor will ask me when they can expect distributions to come to begin. And I can tell them it's literally maybe a month and a half after we close on the property, because there's still, there's already a couple hundred tenants in there paying rent. And so as soon as we become the owners, that rent comes to us and then we can begin to distribute it. And so these are properties that they need some fine tuning. Maybe it's bringing them up from an 80s or 90s finish, getting rid of the linoleum and the Formica countertops, bringing it up to some quartz and some nice vinyl plank. Those kind of upgrades, as I mentioned, like dog parks, the Amazon lockers, upgrading the clubhouse and those other, shared facilities to, what people expect in 2021. Those can significantly help us increase the rents, which directly impacts what we can sell this property for. So we're looking for those kind of turnaround opportunities, upgrade opportunities, under market rents. Maybe for some reason it's not managed to its best, to do the best that it could be. And so there's above market vacancy. We know we can come in there and with our marketing, with our reach, we can bring additional tenants and increase the occupancy, et cetera. So we're not looking for complete turnarounds, places that are, just really dysfunctional, but we're picking up properties that we know we can go in there and fine tune.
Great. Well, let's talk about the challenges in the space. What do you see as the main challenge for real estate investors today?
Yeah, so investors across the board, whether it is general partners and the operators, it is tough to find good deals. There's a lot of competition. For the passive investors, I think the challenge is always just finding good operators. For an individual who wants to put dollars to work in commercial real estate, commercial multifamily, they may or may not know. Most individuals don't know operators in this space. There's a lot of them. So then they start to Google, they start to ask around. They might find one or two, but maybe don't have access to multiples where they can vet and compare. So I think it's easier than most people might think it is, but just getting in front of or connecting with a number of good operators that you can do a contrast and compare may be a challenge.
Great. Well, there's many types of real estate deals out there. If you had to pick one or two sectors or applications you think are the best ones to go after, what do you put at the top of the list today?
Yeah, it probably doesn't come as any surprise, but I do like multifamily in particular. And we've seen it even with a challenging year, again, with COVID and eviction moratoriums. We've had additional people walk away from leases. We've had to do more payment plans. But even so, they're still performing very well because of the scale that these operate in. We also have assets in self-storage and mobile home parks. Mobile home parks, they're just not getting built anymore. So the limited opportunities there, or the opportunities are really strong there for those existing, for the limited number of mobile home parks that already exist. And self-storage, people are always, even in a pandemic, people are still buying a lot of stuff and then they need to find a place to put it. And so our self-storage properties have done well too. For me, I'd get more nervous around retail and office opportunities, but I like the ones where it's a place for people to live or to store their junk.
Well, why are they not making mobile home parks anymore? Is there something that changed in the market?
Yeah, generally, cities don't like them. The city planning, the city councils, they're just generally looked upon unfavorably as far as the aesthetics. I think that's, might be a little harsh, but you just don't see a lot of new mobile home parks being approved for development.
Okay. You see these people moving out to rural areas, or do you think they're just going to upgrade to tiny homes or full homes, or where do you think they'll go? Yeah,
you see a lot of it, just getting out into the country a little bit where you see some acreage and then somebody's just plopped down a mobile home park out there by themselves. They just hook up a septic system and whatnot, run some electricity out there. They're good to go. And so that's certainly going to be the option. And it's not prohibitively expensive to move a mobile home. And so it's just a matter of finding that acreage you can drop one onto. But I think there's not really opportunities for us as commercial operators to play in that sphere because we need them all together and, under one single asset, and it can be lucrative, but there's just not new mobile home parks like that being developed in mass quantities.
Gotcha. Okay. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, for me, I've had a lot of experience on some of the residential active methods of real estate, fix and flips, wholesaling. I've wholesaled houses, I've wholesaled land. I've done Airbnbs, good and bad to all of those. I wouldn't begrudge anybody from getting their hands dirty in any of those types of assets. That's where I learned a ton. What I tell people is, regardless of a property manager on the single family, 3-plexes, 4-plexes, whatnot, those are always going to involve a lot of attention. When you get into the larger scale things, that's where you have the opportunity to be truly passive. Right now, I'm dealing with some issues in San Antonio. I've got a 4-plex down there, a good property manager, but I haven't been paid a lick of rent in over 8 months from any tenant in that property. And it's just a headache. No matter what, I've got city code calling. I've got tenants harassing the property manager, so she's complaining and whatnot. So I'm a big fan of ditching the single family stuff or what we'd call residential and getting into the larger scale opportunities.
Gotcha. Well, how best for listeners get back in touch with you?
Yeah, I try to make myself pretty available in all the social media channels. Probably the best way to find me, though, would be to come right to our website where you can find, whichever way is the most comfortable for the individual. Sugarhouseinvestments.com is where is the name of our company. Sugarhouse is a little nod to our favorite neighborhood in Salt Lake City, where I'm originally from. So we came here to Texas, started up that little our company, and wanted to give a nod to that little neighborhood there in Utah. So Sugarhouseinvestments.com is the best way to find me.
Great. Well, thank you for joining us today, and hope to have you back for a follow-up soon.
Absolutely. Thank you very much for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.